from some other industry into finance. And I think we need to think more about how we find more problem solvers. And if you're trying to advance your career, ask yourself, are you adding to your toolbox? Can you work on complex problems? Can you work on multiple situations at the same time? And then lastly, this is a time to reflect and know why you're doing it. Know why you want to work somewhere or pursue a particular job. Because, of course, the industry pays well, but if you do something just for money, at some point that's not going to be enough. And you're probably not going to be good at it if you don't have a natural interest in it.
Jonathan, it was great to catch up on Monday at the LSE event. It's been great to catch up today. Really enjoy spending some time with you. Thank you very much indeed for sharing some of it with us. Thank you.
Thank you.
Jonathan Levine, Bain Capital, a co-managing partner. Thank you very much indeed. This is Bloomberg.
This is Bloomberg Markets. I'm Ritika Gupta, and you're looking at a live shot of the principal room. Tune in to Bloomberg's monthly series, Chief Future Officer. This episode featuring Macy's CFO Adrian Mitchell is now on Bloomberg.com and YouTube. This is Bloomberg.
In case you hadn't heard, it's a time of great uncertainty, and investors are having to allocate capital in that environment. There's geopolitical risk, inflation, and a labor shortage. So where will you find the best returns? Elisa Wood, the global head of private markets and real assets product strategies at KKR, is joining us now. Elisa, when you have to put money to work, put down capital in this market, where can you do so?
In this type of uncertain times, you need to own three things, and that's what we tell our investors. First and foremost, you need to invest behind inflation-protected assets, things like real estate, things like infrastructure, things that have asset-backed lending behind them, collateralized cash flows, things of that nature really act as a hedge in this type of environment. The second is think long-term. Think long-term private equity, long-duration private equity. Buy assets that you can actually affect the value, change the value of over a long period of time, and you're not playing to the short-term market wins. And thirdly, you really want to lean into value over growth. In this type of environment for the last several years, we have really been chasing growth as a market. And that trade is now coming to an end, and really trying to lean into places where there is value. And that's really where you want to lean in today.
Elisa, it sounds like you've got a fairly good idea of where you want to go, but the environment we're operating in at the moment is highly uncertain. How do I get optionality in that environment? If things change, how do I pivot, and what kind of assets do I want to own that are going to give me that optionality? Cash is one, but what else is there out there?
At the end of the day, we always like to say you only can control what you can control. And you want to create a foundation that you can have those pivots, as you say. So creating a strong asset allocation that has diversification in it, that you're not leaning in too heavily to a certain geography, to a certain industry, to a certain asset class, is very, very important. And aside from that, you also want to be with managers that have seen this before. It's one of the things we're seeing with our clients every day, where you want to invest with managers who understand how to navigate these dislocated times. We look at dislocation today and actually see it as an opportunity. We're not sitting here worried about the future. We're sitting here actually quite excited about the opportunities and the pivots, as you say, that we have ahead of us, right? One of the things that I think that's most interesting coming out of the pandemic is the fact that while maybe we haven't seen a pure pandemic like this before in this type of size and scale, and obviously human tragedy as well, we have seen other market dislocations over time, whether it was the great financial crisis, whether it was the dot-com bubble, whether it was geopolitical events like September 11th. And investing behind managers who understand how to pivot and navigate through those cycles and have that optionality, but also diversification in their portfolios is very, very important for an environment like the one we're in today, but also that we're going to be in for a number of years.
Well, Elisa, just because you brought us back to the financial crisis, there was obviously a housing component in that. We may not be in a housing bubble at the moment, but the market is very, very hot right now. with potentially higher rates coming and coming quite eventually, aggressively potentially this year, why do you still want to be in housing? Do you not think that potentially higher mortgage rates are going to start damping down the action we're seeing in that industry?
We're actually seeing the housing market shift a bunch. So if you think about one of the biggest trends coming out of the pandemic, it's actually the trend of nesting. When you think about the number of millennials that exist today in our population and how they're aging, they need places to live. They're no longer living with their parents. So because of where interest rates are, they may not go buy their first home, but they may be renting their first home. So that trend is still alive and well. They need to live somewhere. When you look at the aging baby boomers, the housing trends there are also evolving. As they continue to age, we think senior living could be a really interesting place to invest and put capital today. So I would say, to answer the question more directly, housing is still quite interesting. They're just pivots within the housing themes that, maybe didn't exist a few years ago.
Alicia, as a bottom-up granular investor, how are you thinking about the macro story? Are you starting to think about the idea, despite some of these kind of fundamental trends that are existing, that they could be complicated, for instance, by a significant economic slowdown? You talked about the more positive picture we certainly have at the moment, but the market's starting to worry that we could be heading for a recession. How differently would you be positioned if that were the case? Do you think a recession could be a risk in terms of the horizon we should be looking at?
We think there will be some type of correction over the medium term. Now, what is medium term? It could be 3 years, it could be 5 years, somewhere in that period, we're expecting some type of correction. Now, we are granular investors. At the end of the day, we're investing in good companies and good assets that we can make better. That is fundamentally what we try to do. We think about the long term. We're not here to gamble. We're not here to place 3 month, 6 month, 12-month bets. We're here to invest in businesses that we will own for many, many years to come. So one of the things, back to the control what we can control management, we can control when we buy and when we sell a business, we can control what levers we pull and when we pull them to help maximize the value in that company. So if that's the perspective that we're taking over a very, very long term, that gives us more comfort that we will invest in a company, put a capital structure in place that could weather the storms that may come over this period of time and really be able to continue to drive value for our clients.